Let's rock and roll with some Frank's charts here, bro.
What do you got for us?
All right. Well, let's start with an easy one, and this is HZNP, Horizon Therapeutics. Good old fashioned. There's not a ton of textbook breakouts. We do have longer developing ones like AMAT still in play, right? But not a lot of things are kind of holding up at resistance for clean breakouts. I did not feel that way with Horizon Therapeutics here. Very interesting price development, gap up on earnings, sideways action ever since, pushing into that resistance. Just nothing fancy with these guys, right? I mean, this is kind of a textbook Frank type of a chart. If we can take out that resistance, I expect an easy move to 120 and with room beyond.
Well, and obviously I like the high base on the weekly chart, and you got to love the 9 EMA riding here. You look at this on the weekly chart, riding the 9, riding the 9, riding the 9. You got to like that, especially as it starts to build momentum here, Frankie, on the weekly chart. Very similar over here. You got to like that type scenario. Breakout got gobbled up there. When you look at the breakout, I was thinking 120 myself too here, Frankie. When you look at the recent breakouts of against 98, kind of drove on the weekly chart into the 110. When you look at this breakout over here, broke out of 82, drove into about 95, 10, 13 points on the weekly breakout channels. If you're looking at that, I think 120 makes a lot of sense on the daily as well as the weekly. I like this potential breakout. I think it gets clean above 111.70.
And I like how it held up in the face of the volatility this week.
Sure.
Agreed.
Right.
Agreed.
I mean, it really didn't
Especially
take
in healthcare,
part.
man.
Yeah. I mean, it really didn't take part in much either way. So just a nice clean breakout, right? Always want a few things along those lines. Just while we're talking breaks, and these won't be for probably next week, but there are some interesting weekly ones. We looked at AMAT last week. It's the same beautiful weekly chart this week as it was last week. Keep an eye on that. We still are seeing good movement over in the semiconductors, and they definitely held up relatively. And ICE is another one, Maddie.
Well, can I say something, Dave?
Yeah, of course.
AMAT, on AMAT, or as we like to say at Tucktron, hey, Matt. On AMAT here.
I don't know if we do or just you do.
It was the collective we. It was
The royal we.
Okay, the royal we. I got
it. But when you're looking at AMAT here, I think it's on the list until it breaks or until support gives here, Frankie, because I don't want to be the trader on a company like Applied Materials where I'm going to micromanage the distance between the breakout channel. As long as you're seeing the consistency play out here above the 20 period weekly, as long as you're seeing that, I think I truly do think you line up that breakout pretty decently. And even with the recent bout in volatility, look at it get gobbled up here on the 50-day moving average, kissing against that breakout channel. I like it, Frank. And you're at 142. The breakout channel's right there at 145. It's on the list for me this week. Whether it gets passed or not, we'll see what the coaches have to say. But it's on the list for me this week.
Yeah, 100%. I mean, listen, I don't know if it'll break. I don't know if I'll trade it assuming
I like it
does,
more this week than last week.
I do know I want to be the one making that call. If this thing breaks, I want to at least be debating the merits of the trade than seeing if risk reward is there. I'm 100% with you there.
100%. What was your next one?
The other one is ICE, and it's very similar.
Mm-hmm.
Plus, it's a really cool ticker symbol, right? Very similar top end to AMAT. I think these guys, whereas AMAT, I could see a scenario where maybe we are put into decision making as early as next week. Mm-hmm. Realistically, I have a hard time seeing ICE being the same way, and I don't really want that. But I'd like to see us continue to work into that resistance, pull back a little bit. Let's create a higher low, and then we can start prepping a trade. So this is more watch list. As opposed to let's party.
I like the 122 handle, but the problem is you're at 120 here, and even if you go up another 2 ATRs getting into 122, you're going to be looking at this as overextended. You just are.
Yep, we need some time.
you're going to see it very similar to this type of price movement that got just drove right back down. You're coming from 116 all the way to 122. I know 6 points against 120 isn't very much when you're talking about a big dog growth type company.
Mm-hmm.
That's not the Intercontinental Exchange company. And so when we're looking at this, you're just going to see that as overextended. I think you're 2 weeks from here.
Yep.
But at the same time, radar candidate because the weekly chart looks good.
Weekly chart is developing.
Exactly. And you always want something like this, right? That you probably don't have to, have any action on next week, but would be very interested if it does ultimately break. But I 100% agree with you, Maddie. We need some time to cook, right?
Yeah,
if we run and break out next week, I mean, boy, there's running hot, and then there's whatever that would be.
No, that leaves all of us behind.
Yep, exactly. All right, I want to talk Anaplan, PLAN.
Plan.
So these
Plan the
guys,
trade.
I've really appreciated the price action I've seen on these guys this week. I don't know about you guys. They were on the reports. I want to say the stock report this week.
Last week.
The big gap up on earnings, pullback, testing old resistance, stabilizing, even more evidence in the face of some heightened volatility that support does want to hold for us. I think this one for me is fairly straightforward in the sense of you're using the weekly candlestick, low for the stop, high for the entry, with a target at 70, kind of for that first target, that old resistance. But there's room to roll. And if we can work through that, I mean, there's not a lot until we get into the 73 to 75 range. We've got a lot of chop in that ballpark, but I still really like these. I really like the way that the price has developed throughout the week, in a week where it would have been really easy to blow this pattern up, right? On Monday, gap down, get below that. Now I have to think a lot more. I think it's probably even nicer looking this week than last week.
I would agree with that. I think it is nicer looking on the weekly chart this week. And if there was a week that this weekly chart was going to come right back down within the historical ranges, it would have been Monday, right? That's the type of day that does drive stuff like that. I think you got to start, and I said this last week when we talked about it, but I'll say it again this week. I think on something like plan, you start with you really do love the zone, right? And you're seeing that with the traders right now this week saying, yeah, we have confidence in this zone because this zone has been historically defined. And once a zone of support or resistance is historically defined, traders are going to attach themselves to it. And so when you look at this old resistance, new support, old resistance, I mean, this zone at 63 to 64, or excuse me, 63 and a half to really kind of that 64 and a half zone, when you're looking at that has been historically defined. It broke out on a positive response to an earnings catalyst. That's usually a telltale sign. You break out, you consolidate, you come back down, you're testing that breakout channel. I think if you're looking at an opportunity, this is your opportunity that you have on a company like Plan, where you have a very simple get out. You have a very simple get out. You got the oh my goodness, it all goes wrong type scenario. Well, the daily, the weekly, the monthly, they all converge right there at about 63. Stop loss right underneath the base here. Pick your poison, whether you choose the wicks, the zone. I think you got to start with the stop loss under 63 and a half. But you got cheap risk here, in my opinion. Target-wise, Frankie, I think on a swing trade, your target is somewhere in the chop between 69 and 70 over here. But on the weekly chart, I think in the back of your mind, you're saying if we can hold here, reclaim 70, it's a quick journey to 75.
And that's what really stood out to me with these guys is beyond the entry side of the equation. I mean, we do have to navigate 70, right? The only thing I know for sure is last time, when we gapped into that, we got slammed, right? We lost that fight pretty miserably.
Well, you should have lost that fight.
And we should have, yeah. But we better respect that number, right? But beyond that, it really is pretty clear. And so you have a really nice window of trading in here, however you like to go about it, right? But I agree, 70 is kind of that. Real great reason not to work to that. That's where the battles begin. But if we can win those fights, I do like our chances of getting back into that chop.
And let me explain why you should have lost that fight. You should lose that fight because you're completely overextended following a positive response to earnings, and you're coming into that overextended at a significant whole number called 75 that has tremendous chop to the left side of the chart. You should lose that fight. That's why you don't chase, is because those fights typically get lost. As the profit taking sessions take in, you start looking at the secondary technical analysis, which is the secondary pattern following a price response to earnings. That's what's occurring right now over the last 2 weeks. I like it. I think it's cheap risk, and I think the analysis coming into it does have good multiple time frame analysis on it. But the number one thing I like about it is the zone. Easy stop loss placement.
Yeah.
If it doesn't work, cheap risk, get out.
Yep, exactly. Tim, anything you'd add?
I was looking into the earnings report when you brought up the chart, because I remember covering this one. I was looking into some of the data as to what created that gap, and they did raise their revenue guidance, and their cloud-based revenue came in better than expected. They're still losing money, but the market really loved that. And I love that weekly chart story that you just brought up, Matt, in terms of the overall storyline between pivot relationships and all that kind of stuff. Breaking above that key level, now that I see as we're moving forward, raised full year 2022 guidance, I'm going to dig into this one. I like the chart in the short term. I'm interested in the story here a little bit. I'm going to dig a little bit more into them and add them to my watch list. I have not had them in there in the past.
And I also think there is a certain, I know there hasn't been much in terms of upward movement in price this week. You're just kind of stuck in mud between 64 and 65. But with the market that went down, what it felt like 5% followed by a 5% recovery. I know it wasn't that, but that's kind of what it felt like on Monday and Tuesday. This just kind of just acted like it was another day at the park.
Yeah, it feels interesting as well. Yeah, I like it, Frank. I circled it. I got an asterisk next to it, and I'm gonna add it to my watch list. So appreciate it, the chart there, man.
Hey, that's what I'm here for. That's literally
the name of the segment.
So there you go. All right, Maddie, I'm going to see if I can get you interested in a potential reversal on TreeHouse Foods, THS. Now we got to take out the 50-day moving average, right? I mean, that goes without saying.
Head and shoulders pretty clean above 40.
Yeah, exactly. There's a lot of ifs. There's a lot of battles that very well might not be won on a chart that looks like this, right? But what I love is it is a pretty clean looking head and shoulders. Resistance is starting to line up very nicely with that 50-day moving average, just approximately $40. That would also get us back above that 9 weekly for whatever that's worth for the first time in quite some while. And we do have a nice gap, an alligator mouth of the 200 and the 50-day moving average. We have a nice little window of profit. I mean, any conversation, and they are coming off. This is all starting at a major support zone, right? They got major support around $35-$36, where this is starting to happen. Right. So it's coming off of the background, a lot of support in this zone, early signs of reversal. Probably wouldn't hurt to take another week, let those moving averages kind of pinch us between the 20 and the 50. But if we can take out that resistance, and we'll just call it a close above the 50-day moving average to give it an actual official number or name, Maddie, could I interest you in a reversal play on TreeHouse?
First and foremost, you whenever you start with reversal analysis, you look at the pattern, right? Nice little left shoulder, head, right shoulder, left shoulder, right shoulder, very consistent. Neckline 40, neckline 40. The convergence of the 50-day moving average right there at 40. That's pretty clean reversal. That's number one. Because of the clean reversal, number one, I think we should take this dog on a walk. Okay. Now, what I mean by that?
Let's go for a walk. I'm all right with it.
Go for a walk. Okay. What I mean by that is let's paint some things here. Okay. Number one, all of this analysis starts with reclaiming that line in the sand, correct?
100%.
Okay. Gotta reclaim that line in the sand. What's that line in the sand is reclaimed. Once again, line in the sand. Let's go for a walk. That is target number one. Give us a high base. That is target number two. Give us a retracement. Then we pound into the 50-day moving average. Let's go for a walk.
I'll sign up for that walk. I will sign up for that walk. And the thing is, and I say this all the time because it's true, when you're dealing with reversal patterns, there's a lot of upside, but a little bit lower probability than you're probably finding on a traditional breakout or a traditional retracement, right?
Mhm.
But that's what's so interesting about them to me is it all starts somewhere, right? Every story begins somewhere, and this is how this, at least one of the main ways that this type of story can begin. There are definitely some interesting reversal candidates out there. I thought these guys were worth taking a peek at
Well,
myself.
and honestly, if I was going to take that dog on a walk, the reversal I would draw.
There, yep.
I'm all right with that. Yeah, I'm all right with that. And I think it's probably worth mentioning that when you're talking about these reversals,
Mhm.
you don't necessarily have to be the dude who gets in on the first break, right?
No, there's
somebody
three
does.
trading signals here, Frank.
Exactly. And I would say potentially a fourth too, in the sense that if we power through that 50 really quickly and get that big green bar too, that make it, fairly difficult to trade unless you have the order set up, look for that Cody special, that snap back in to that moving average to see if we can actually hold that up. So that is another viable way to look to these things. Yep, exactly. Where we pop, pull back, and then go from there. So think about it as the window, right? That would be a bullish signal. Here's my window. What would I like to see in the window? And it might be different for all of us, which is okay.
This new drawing tool might be too much power in one man's hands.
I'm not going to lie. I like it.
By the way, I've had a couple of people request, what is it? What is it called? A lot of people like it as well. Obviously in the chat, Tackle's happy about it.
Yeah, what I like about it is it allows me to visualize. Number one, I do it all the time just for myself.
I do too.
All the time I do it. But remember when I'm projecting out 1, 2, 3 patterns, right? I just like to visualize it on the chart. And so, Coach Gino has a tech called Epic Pen. And so I purchased Epic Pen, and that allows me to draw things a little bit more clearly for team tackles. So a little bit better than some of the drawing tools within Thinkorswim, or quite frankly, drawing tools within any software platform. But it is Epic Pen, and I the simplicity of it. It's not a big download. Like it's not going to take a lot of space on your hard drive. Really simple. I think it was like $20.
Dude, that's cool. Epic Pen. Yeah,
Epic Pen.
I love the visuals.
This segment, Frank's chart, brought to you by the hypothetical revenue that Epic Pen will eventually pay tackle trading.
It's pretty cool. It is pretty cool. It's awesome to be able to. I don't know how people don't do that. You've seen my charts internally, right? I've always got a million lines and wiggly squiggles, and it makes sense to me, maybe to a normal person.
Don't do this number. Like, don't draw every hypothetical scenario that could ever occur in the history of mankind. Draw what you want, visualize, draw accuracy. Like I just it could come.
What if I want that? It looks like Freddy Krueger's claw. Got it. I kind of like
it.
It is.
One. Just think about the type of support and resistance zones I can draw in here, Frankie. Look at that.
Wow, see, look at that. You draw enough lines. I can draw.
Awesome. I can draw all these lines, bro. I told you it's too much power.
It's this one's getting off the rails there. That looked like a freeway lanes to me. All the different lanes you could take.
I like Freddy Krueger. I like that one.
A good
call, I immediately thought Andrew's pitchfork for some reason.
Yeah.
Not that I'm a fan of Andrew's
pitchfork. Is that what you think of me? I have an angry pitchfork in my hand.
Well, it looked like you were drawing one. I was like, is Matt really going to the Andrew pitchfork? But then you drew too many lines.
I was making fun of the line drawers.
That's right. Frank, any more charts?
Well, let's just look at one potential bear, and then we'll wrap up here.
Sounds good.
And I think this one's interesting, and it's WBA. And this is maybe not one that makes the reports. I don't know. This might be a Frank style of bear. But what I liked about these guys, Maddie, and just kind of like to talk you through a little bit, is we've created an upward trend going back into the lows from July into the low, mid-September, September 15th, right? And I would argue that we either breached or are on the fine line of giving up that trend line, which is also going to line up really nicely with this weekly low, right? And so I'm seeing a little bit of a space that develops if we can take out this weekly low. There's going to be minor levels of support, but because of the nature of trend development, there's really kind of a fairly clear space between that failed trend line and that old, true support level around 46. Yeah, you have to navigate, most notably probably approximately 47. I don't know that this would be a report one or not, because this is my style of bear personally. But if this 9 continues to push us down, if we end up pushing back through the 9, I'll null and void this one, right? Because this could go the other way too if we draw the trend line, from the highs back in early September into the high from September 16th, in a weird, ugly, really ugly way, a little bit of an ugly triangle, right? So if we reclaim that 9, I'll nullify this. But if we break support before we reclaim the 9, I would look at this from bearish point of view, looking to work back down towards that support level. Did I sell you at least on a watch list for it?
There's some good bear candidates out there today.
There are, for sure.
There's some good bear candidates. So I'm not sure if I got there on this one or not, honestly. See, that's the problem with the lines when I move the scale.
When you move.
So we gotta go ahead and.
Well, that's why I think you have to take out today's low or this week's low, because
I do think you have to take out the low, and if you
then where's the artistic license on the lines, right?
Those are null and void at that point. But if you do take out the low, I think you're driving it down to 47. I'll veto, because again, you're tight in front of earnings. We are starting earnings season too, by the way.
Don't say that. No,
I know.
Don't say it.
Hold on. I got something for you, bro.
Matt for Fed Chair to knock it to 2
I've already done this. Like there you go, right there. See that? That's grotesque. Just 2. Come on, let's start a trend. Just 2 earnings seasons. That's all we need.
I will accept 2. I will accept 3.
Listen, you can't take 1, because then they'll cheat too much.
Yeah, I agree. I mean, I don't know.
2's a good proposal.
It's a good proposal.
It's a good compromise. It is.
So in terms of this, and maybe on the other 2, you have some type of report, but not a full-fledged earnings report. But again, that's for, when I'm czar. Right now, we're just looking at a scenario where even if this does violate, I'm not sure you get the return to justify the risk. Not when I'm looking at an environment from a bear perspective, and I'm looking at, say, yes, Tim, I'm bringing up Logitech, and I'm talking on the Logitech headset, and Logitech is amazing. But I'm looking at a bear retracement in Logitech. I got more time in front of earnings. I got a downtrend here. Real simple trigger right underneath, say 97.5 and change. I'm looking at that. In the communication space, I hate to do it, but I'm going to. Activision, recent violation of everything, now kissing against 75. That's interesting to me.
Oh, for sure.
When you're looking at, we talked about getting froggy. Well, my goodness, let's get froggy here. I got frog here underneath 35. Makes a lot of sense. Recent IPO from last year just has not found any degree of placement in the marketplace. When you're looking at the basic material space,
yeah, like the Dow 3M.
I wrote Dow down. Dow's on my list. Bear flag coming into the 9. Let's take a look at Yum Brands, right? Little recent volatility to the downside. Low base scenario where 120 is in line. I just think, in a world where there really is 50-50 right now in the market, I think there's some pretty good bears out there. It's not the fact that the technical setup isn't there. It is. I just don't think the target's there.
See, yeah, and that's fair. If the risk reward is not there, I think the risk reward is there, and I think that's. I mean, that's always going to be, assuming the technicals are there. That's always going to be the next important thing, right? And I don't know.
Subjective nature to that, right?
Exactly. So you go with your target. So, but yeah, there are a lot of bearish retracements out there for sure. Not a problem. One more bear retracement. What do you think about CTVA, Matt? So this is the week after pattern of WBA that I just talked about, right? Where they had that trend line. They sold into the old support zone, have retraced back to that trend line. See, this is the scaling into the downside.
100%. You took my analysis, Frankie. Just go with it, because that's exactly what I was looking at here too.
So and a scale in, is that where you?
Yeah.
So scale in half on the retracement or third on the retracement, add on the break itself.
What I love about it is you do have a double bottom scenario right there at about 40.5, 41. You do have that bottoming scenario, but you got a good bearish downtrend coming into that bottom scenario. I like the probability edge to the downside here. And the reason I like the scaled in approach here is because you do have the bottoming condition. You have to take that into account, but I like it underneath 42, drive it to 41, and then what you're really looking at. So you're doing just I wouldn't say it's a 50-50 scaling situation. It's one of those ones where like, I want to dip my toe in, and then I want to put my leg in, and then I just want to get in the water, right?
Yep.
I just want to dip my toe in underneath the, let me take that off the trade tab. Let me come back to the chart. I just want to dip my toe in as this bear retrace starts to kind of figure itself out. You got a nice little support level right there at 42 that coincides with support over here as well. And so you do have that nice little support level at 42.
I think that's the 50 weekly too, if I'm not mistaken.
I was going to come out just to check, and that is, no, that the 50 weekly is at 43, and it's acting as resistance right now. It certainly adds to the bearish retracement analysis.
Yeah, agreed.
Though.
Yeah, for sure.
When you're looking at this, I like it underneath 42. You dip your toe in. Ultimately, though, you're looking at this on a weekly chart saying if we can give out at 40.5, where kind of the weekly low is here, my goodness, guys, there's not a lot until about 35, and even that's a hypothetical. You really don't have anything that's actually confirmed pivot-wise until you get into about the 32.5 range. And so, yeah, and even if like the dipping of the toe is like, no, let's just wait for the ultimate break. Yeah, sign me up for that one as well.
Fair enough, yeah.
It doesn't matter how you want to play it. Both good. I like it ultimately underneath 40, and I really like the fact that resistance is coming in right there at the 50-day moving average, which was acting as a consistent support level there for about 4 or 5 weeks as well.
Yeah, that's not a great sign.
Again, got to get some downward movements in prices here, but it does look like it's shaping up for a good short trade.
Agreed. Awesome. Tim, anything you'd like to add?
No, that weekly chart really does paint a bigger opportunity for me than I saw on the daily. So that's why time frame analysis is so important. Interesting conversation on the scale into another trade. I love this kind of stuff, guys, and a lot of great charts there. And there's a lot of great bears, Matt, as you were just flashing through some of yours as well. Very, very fascinating market we're in. I think we're going to have good watch lists for everybody out there. So.
Can I rapid fire just some bear candidates?
Yeah.
Okay,
give me a couple. Yeah.
The one nobody wants to see.
Apple. Yeah,
it is. And now again, I'm not looking at short here. I'm just showing
they have fun, dude.
Like no. That's not me. It's Apple. Big dog, the biggest of the dog. Nope. Apple's in the Great War in 2035, and they might be the leader in the horse race right now. Right, in that great war of who's going to win the corporate war of 2035.
They're certainly a favorite.
I'm just saying, technically, they're not looking very good right now. But to take another tech stock, here's old Akamai. You know, bear retrace coming into the 200 days, got a doji there, but showing weakness overall. I already took a look at Frog. I'll bring up one of Tim's favorites. Shopify here makes a lot of sense for me underneath 1400. Wix, Wix underneath 200 makes some sense to me. Talked about Facebook. Let me throw you one out. Fubu here. Nice little support level at 25. A violation of that support level where you are kissing up against it in a low base. Could see price depreciation all the way down to 20. So keep an eye on that one with Fubu. And plus communication sector, pretty much garbage right now. Let's take another look at another comms pick. Chinese giant NetEase here, looking at a very important test of 78 and change. You look at that on a weekly chart, you're going to see a little bit of a point where if it violates, you could see all the way down to the 200-day moving average. Keep an eye on that one. Let's take a look at big box retailer Best Buy, just not finding any love. Look at the volatility to the downside. Can't catch a bid price even on this week following the Fed. Still could not catch a bid price. That looks like it wants to come all the way down to at least 100. Let's take a quick peek at QSR, one of my favorite bear retracements in the market here today, coming into resistance. Look at the 9 EMA, look at the confirmation to the downside, and I haven't even talked about gold stocks yet, but you see the point. There's a lot of good bear setups out there right now.
There are. That was so ugly. I want to Keep an eye on MGM.
You
on
want
the
to end
bull
on
side.
something good.
I want to end
on something pretty. Yeah, okay.
MGM, big breakout. And
What about Six Flags, bro?
Six Flags?
What about Six Flags? Continuation above
I
45
argue
here.
that there's still room up
Guys,
to.
there's room on the bandwagon here.
My
above
target
45.
has not changed on Six Flags at $50. So if you can make risk to reward work, but very, very nice development out of that triangle. Our friend, I mean, there's a lot of great things, breakout type of trades in energy, but look at DVN. I mean, they just broke out.
Devon, high flyer.
They've got a lot of room until their next level of resistance. Their next major level is up there in that 44, 45 range. Obviously, that's probably not a swing trade to get there.
No,
but yeah, and that really does illustrate the point. I mean, there's some really nice looking charts and some really ugly charts in the marketplace, and so you are going to have, no pun intended, a lot of options going into next week from a trading point of view.
I love it. And I want one more chart to analyze, and we're going to start wrapping the show. Give me ExxonMobil. I promised Mayor, one of our veterans and tackle members. I've known Mayor.
That's a W reversal confirmation. It's a yes for me.
Yeah, the simple question that I'll have, and it'll be a little bit of work.
It's not a directional yes.
It will be. I think directionally, I think there are some energy stocks I prefer to Exxon. I put them on my list as well for more of the cash flow wimpy type of philosophy. Nothing wrong with that philosophy.
There is nothing wrong with the cash flow wimpy philosophy, Frankie.
Nothing at all. No. When I call somebody a wimp, it is a sign of endearment.
100%.
I'm never judging the from that point of view. It's the question I have is, where does it line up compared to other stocks in the space? Because look at XLE, looks virtually the same, right? I could give you, Hess, not too much different. Holly, a little further behind. Oxy, one of my favorites, breaking out. And so there are a lot of options there.
Let's go two big dogs here. Let's go, directional versus cash flow.
Okay.
Very quickly. So you got ExxonMobil, right? W confirm off the 200. You got
nice.
Conoco, and it is nice. I like it. You got Conoco, Conoco's just went gangbusters. Okay. CVX, W formation, break back above the 200. Very similar, right? It's underperforming Exxon. It's underperforming the energy sector as a whole, but it played a little catch up this week, guys.
For sure.
It played a little catch up this week, reclaiming almost everything here. That's something to keep an eye on Chevron. And then you have BP here.
BP's nice.
Right? So for me, and we'll just play the agree or disagree game. If I had to take one directional and one more position style with the cash flow edge, okay? I think it's easily the debate on the cash flow edge type scenarios. I think you're debating Chevron and ExxonMobil. I think
100%. 100% agree.
But if you're looking at directional, I'm going to take the $26 breakout in BP and drive it into 28 and not even think about it.
Mm-hmm. Yeah, and I haven't fully done this, so I won't marry this, but I'd probably lean toward Devon Energy directionally. But I mean, that does go to show. But I agree on the
that breaks rules for me, and not step system rules, by the way, just personal rules.
Yeah, understood.
I should have been quicker on the breakout. That's my fault.
But there's still room on Hess. There's probably still room for you, on Williams if you want to play a little bit of catch up over there. I mean, and that's the great thing about, trading and right now the energy sector. If you are interested, it's fine if you're not, but if you are,
a lot of opportunity.
You like the fact that you have a lot of options, because what I'm going to do this weekend is I'm going to go through all of them and basically risk to reward them all. And whoever wins probably will be the one I choose.
And that's what we're going to do, guys. And right now we're going to go out to the scouting report meeting. We're going to rank all the sectors. We're going to rank the indexes. We're going to rank the commodities. We're going to rank the currencies. We're going to rank them for our scouting reports and our newsletters. And we're going to dial in all of these amazing charts. And we're going to get you the best charts out there in the marketplace in the option and the stock report. And we're going to go out there and we're going to have some fun doing it.